Hello, everyone. I am William. Welcome to this channel, and thanks for joining me here. In today's fast-paced financial environment, an organization's most critical asset is often its liquidity, its ability to meet obligations and seize opportunities. And at the heart of liquidity management lies the money market. But how can we be sure that these short-term investments, the lifeblood of daily operations, are managed safely, efficiently, and correctly? The answer is a rigorous, systematic money market audit. Today, we will embark on a deep dive into this essential process. We will move beyond a simple checklist and explore the strategic framework of a modern money market audit. We'll cover the core objectives and inherent risks that make this audit necessary, a detailed breakdown of the 4 key audit domains, the practical methodologies auditors use, common red flags and real-world findings, and ultimately, how a strong audit program transforms Treasury from a cost center into a value center. This is not just for auditors or treasurers. It's for anyone concerned with good governance, risk management, and financial integrity. Let's begin. First, let's define our scope. The money market is where entities manage short-term liquidity, typically instruments with maturities under 1 year. Think Treasury bills, commercial paper, certificates of deposit, repurchase agreements, repos, bankers' acceptances, and money market mutual funds. These are chosen for their safety, liquidity, and modest return. But safe does not mean risk-free. This is precisely why we audit. We audit to manage a constellation of risks. 1. Credit risk. The risk that an issuer, a corporation, a bank, defaults and cannot repay the principal. Remember, a money market fund can break the buck. 2. Interest rate risk. The risk that rising interest rates cause the market value of existing fixed-rate holdings to fall, creating a paper loss or an actual loss if sold prematurely. 3. Liquidity risk. The paradox. We invest for liquidity, but what if the instrument itself becomes illiquid? Or what if our fund imposes a redemption gate? We audit to ensure our liquid assets are truly accessible. 4. Operational risk. The risk of failure in people, processes, or systems. A misplaced trade ticket, a failed settlement, a lack of reconciliation, these can be as damaging as a default. 5. Compliance risk. The risk of violating internal investment policies, board directives, or external regulations like those governing public sector funds or insurance reserves. An audit is our proactive, independent assessment of how well these risks are identified, measured, monitored, and controlled. Our audit framework rests on 4 interconnected pillars. A weakness in any one can undermine the entire structure. Pillar 1. Governance, strategy, and policy. Here we assess the foundation. We start with the Investment Policy Statement, IPS. This is not a mere document. It is the Treasury's constitution. We ask, is it formally approved by the board or finance committee? Does it clearly articulate the primary objective, preservation of capital, liquidity, or yield optimization? Does it define authorized instruments with specific criteria? Not just commercial paper, but commercial paper rated A1/P1 or better. Are there concentration limits? For example, no more than 20% with any one issuer or 40% in any one sector. Are maturity limits defined? For example, a weighted average portfolio maturity not to exceed 60 days. Is there a clear delegation of authority who can initiate, approve, and execute trades? We interview senior management to see if this policy is understood and alive in daily discussions, not just a document on a shelf. Pillar 2. Credit and counterparty risk management. This is the core of capital preservation. We examine the entire counterparty life cycle. Pre-approval. Is there a formal, documented process for approving banks, issuers, and fund families? Is it based on objective metrics like credit ratings from multiple agencies, capital ratios, and financial health? Ongoing monitoring. We test if the Treasury actively monitors these counterparties. If an issuer is downgraded below policy minimums, is there an automatic freeze on new investments? Is there a process for reviewing and updating the approved list quarterly? Concentration analysis. We use portfolio data to test compliance with issuer, sector, and geographic limits. We look for over-reliance on a single name, even if it's a large bank. Fund analysis. For money market funds, we go beyond the name. We review the fund's prospectus, its mandated credit quality, its liquidity buffers, and its historical NAV stability. We check if it's a government fund, prime fund, or municipal fund, and if that aligns with our risk appetite. Pillar 3, operational controls and the transaction lifecycle. Here, we follow the money. We trace a transaction from inception to settlement to maturity. Initiation and authorization. Is there a formal investment proposal? Are there clear segregation of duties? The person who initiates the trade should not be the one who approves it, books it, and reconciles it. Execution and pricing. Are trades executed at competitive rates? For larger sums, is there evidence of rate shopping or using a bid offer process? We examine trade tickets and broker confirmations for completeness. Settlement and safekeeping. Are securities held with a reputable third-party custodian? Is there a delivery versus payment system to prevent loss? Are there procedures to handle failed settlements? Accounting and reconciliation. This is a critical control point. We test the monthly three-way reconciliation process, comparing the custodian's statement, the Treasury system's records, and the general ledger. Any unreconciled difference is a major red flag. We also verify interest accruals are calculated correctly. Pillar 4, performance measurement, reporting, and valuation. Finally, we assess if the activity is effective and transparent. Valuation. Are investments carried at amortized cost or fair value as per accounting standards? Is the methodology consistent and documented? Performance reporting. Does management receive clear reports showing portfolio composition, maturity schedules, yield to maturity, and weighted average life? More importantly, is performance benchmarked? Are we comparing our portfolio's yield against a relevant index, like the 3-month Treasury bill or the ICE Buffet 1 to 3-month Treasury index? Effectiveness. Reporting. Are comprehensive reports on portfolio status, compliance with policy limits, and counterparty exposures presented regularly to the board's audit committee? How do we gather evidence? Through a mix of procedures. 1. Inquiry and interview. We speak with the treasurer, CFO, and operations staff to understand the process in their own words. 2. Document review. We examine the investment policy, board minutes, trade tickets, confirmations, counterparty approval memos, and management reports. 3. Substantive testing. We select a sample of transactions, perhaps all trades over a certain size or a random sample. For each, we verify, was the counterparty pre-approved? Was the instrument authorized? Was the maturity within limits? Was the rate competitive? Was it settled and recorded correctly? 4. Data analytics. We use the portfolio listing to perform automated tests, calculating actual concentrations, identifying holdings that exceed maturity limits, or flagging securities from issuers not on the approved list. 5. Reperformance. We might independently recalculate the weighted average maturity or the portfolio yield to verify the accuracy of internal reports. Let's translate theory into practice. Here are common findings that signal control breakdowns. The policy is a fossil. It hasn't been updated in 5 years and doesn't reflect current market instruments or the organization's changed risk profile. Concentration creep. We only use big banks leads to 80% of the portfolio with 4 institutions, breaching the spirit of diversification. The one-person band, a single overburdened Treasury analyst handles dealing, settlement, reconciliation, and reporting. This is the highest operational risk. Reconciliation lag. The monthly custodian reconciliation is performed 3 months late and has persistent, unexplained differences that are just plugged. Chasing yield. Investing in a longer-dated CD or a lower-rated commercial paper for a few extra basis points, clearly violating policy for marginal gain. Shadow trading. Transactions executed via phone or email that aren't logged into the Treasury system until days later, breaking the audit trail. Each of these is a symptom of a control weakness that an audit is designed to uncover and remediate. So, what is the ultimate value proposition of an effective money market audit? It is far more than a regulatory or compliance exercise. A robust audit elevates the Treasury function. It provides the board and executive management with unshakable confidence that the organization's liquidity fortress is secure. It protects and optimizes financial assets, ensuring we are not taking undue risk for return, nor leaving yield responsibly on the table. It strengthens the control environment, reducing the risk of fraud and error. And it enhances external credibility with rating agencies, regulators, and investors who look for disciplined cash management. In essence, a money market audit transforms your short-term investment portfolio from a passive, operational necessity into a strategically managed, low-risk asset class that actively contributes to organizational stability and integrity. I encourage you to view your next money market audit not as an inspection, but as a strategic health check, a partnership between audit, Treasury, and the board to refine one of your most vital financial processes. The goal is clear: to ensure that every dollar invested in the money market is working as hard as it can, as safely as it can, for the benefit of the entire organization. Thank you for your time and attention. If you found this video is useful, please do subscribe to this channel and share it out with your friends and colleagues. Thank you for your support, and have a nice day.